You ever open up a market chart and it just looks like a chaotic, meaningless squiggle? Well, today, we're going to change that. We're moving beyond just guessing and learning the simple grammar that tells the story behind the price, so you can look at any chart and read the trend with total confidence. So, take a look at this. At first glance, it can feel like pure chaos. Is the price going up? Is it going down? Or is it just kind of stuck? It's not always obvious. And that feeling of uncertainty, that's exactly what we're here to get rid of today. Here's the secret. It's not about staring harder at the whole picture. Real-world charts aren't like the clean examples in a textbook. They're messy. But underneath all that mess, there's a simple, repeatable pattern. I'm going to show you exactly how to spot that pattern, turning these confusing charts into crystal clear signals. So here's our game plan for building your trend reading toolkit. First, we'll cover the absolute basics, the building blocks. Then, we'll use those to spot clear uptrends and downtrends. Now, the real game changer is section 3, how to see a trend reversal as it's happening. We'll also cover the super important skill of knowing when to just sit on your hands. And to wrap it all up, I've got a pro tip that'll really sharpen your analysis. Okay, first things first, the building blocks. Before you can read a story, you've got to learn the alphabet, right? It's the same exact thing here. Every complex trend, no matter how wild it looks, is built from just a few simple components. Let's break them down. So an uptrend is really just defined by one simple pattern: higher highs and higher lows. The easiest way to picture it is like you're climbing a staircase. The price pushes up to a new high, then it pulls back a little to a higher low, like pausing on a step, and then it pushes up again to an even higher high. That rhythm of 2 steps forward, 1 step back is the absolute classic signature of a healthy uptrend. And a downtrend? Well, it's just the exact opposite. Now we're walking down that staircase. The price drops to a new low, it rallies back a bit to a lower high, and then it falls again to an even lower low. That pattern of lower highs and lower lows is the unmistakable sign of a market in a downtrend. Okay, so we've got our building blocks down: higher highs, higher lows, and their opposites. Now for the fun part. Let's see how they all combine to form the major trends you'll see on any chart out there. This is really where it all starts to click. This really boils it all down. These patterns are so much more than just shapes on a screen. They're basically a window right into the market's mind. An uptrend with that steady march of higher highs tells you buyers are in control. They're feeling confident. A downtrend with those lower lows shows you the sellers are dominant. The pattern literally reveals who has the power. Now, this next part is maybe the most critical skill of all: spotting the exact moment a trend starts to lose steam and begins to reverse. Knowing this can make all the difference. It's about seeing those first signs of weakness before the change is obvious to everybody else. I want you to imagine a strong downtrend. Sellers are firmly in control, pushing the price lower and lower. But then, you start to see the momentum fade. There's a specific 3-step sequence that signals this power shift from the sellers to the buyers. Let's walk through that checklist right now. Here it is, your 3-step checklist. First, you see a sign of weakness. The downtrend tries to make a new low, but it just can't. That's your first clue. Second, you see a shift. The market actually creates a higher low. Now, that's important, but it's not the final signal. The final step, the one that matters most, is confirmation. When the price breaks above that last lower high, that's the moment. The old trend is broken and a new uptrend is officially confirmed. And the great news is, the same logic works perfectly in reverse. A strong, healthy uptrend doesn't go on forever. There are always clear signals that the buyers are running out of steam and the sellers are about to step in and take control. Let's look at that checklist. It's the exact same logic, just flipped on its head. First, weakness, the uptrend fails to make a new higher high. Second, a shift, it creates a lower high instead. And finally, that all-important confirmation, the price breaks below the previous higher low. That right there is your signal that the sellers have officially taken control. We focused a lot on what to look for, but it's just as important to know when to look away. Sometimes the market has no clear direction, and recognizing that indecision is a skill in itself. Often, believe it or not, the most profitable move you can make is to do nothing at all. This is what we call a sideways market. You might also hear it called a range. The price is just trapped, bouncing between a floor and a ceiling, with no clear pattern of highs or lows. It's basically a sign of a stalemate, a tug-of-war between buyers and sellers where no one is winning. Trying to find a trend in here is a recipe for frustration, and it's one of the biggest mistakes you can make. This is such a great piece of wisdom. If you can't spot a clear trend, don't try to invent one. Don't chase the market. You have to be patient. Your job is to wait for the market to form that clear uptrend or downtrend and give you a clear signal. You just have to let the opportunity come to you. All right, you've got the core concepts down. Now, for one final, really powerful tip. It's a simple change in perspective that can dramatically increase the accuracy of your trend reading. This technique is all about seeing the bigger picture and making sure you're trading with the market's momentum, not trying to fight against it. It's just one extra step you add to your routine, but trust me, it can make all the difference in the world. Here it is. Always check the weekly chart first. Think of the weekly trend as a powerful river current. The daily or hourly trend, that's just a tiny boat on that river. So if the river is flowing north in a big uptrend, you only want to be rowing north with it. If it's flowing south, you look for chances to go south. By aligning your shorter-term trades with that massive long-term trend, you stop fighting the current and you dramatically improve your odds. So there you have it, a systematic way to read any chart. It's not magic, it's a language, and it's based on these clear, simple patterns. The next time you open a chart, don't just see a random line. Look for the higher highs, the lower lows, and the signs of a reversal. So my final question to you is, now that you know the grammar, what is the market telling you?